Many people became billionaires during the dot-com bubble of the late 90s. Mark Cuban was one of them. After Yahoo acquired Broadcast.com, Cuban became a billionaire. But instead of keeping most of his wealth in Yahoo stock, quickly sold Yahoo stocks and bought the Dallas Mavericks for approximately $285 million in 2000. 23 years later, Cuban sold a controlling stake in the Mavericks at roughly $3.5 billion valuation. The franchise valuation had increased more than 12-fold. Joseph Tsai, the co-founder of Alibaba, followed a similar path. Between 2017 and 2019, Tsai spent approximately $2.35 billion to acquire the Brooklyn Nets. At the time, much of his $5.8 billion net worth came from Alibaba shares. 5 years later, he sold 15% stake in the Nets at a valuation close to $4.7 billion, representing a 200% return. His net worth increased to $9.8 billion at the same year. More recently, Xiaomi's co-founder Bin Lin invested about $125 million for 1% stake in the Miami Dolphins. Like Cuban and Tsai, Lin built most of his wealth through a major technology company. You can probably see the pattern. These billionaires were changing the structure of their wealth by buying sport teams. When Yahoo acquired Broadcast.com, Yahoo was one of the world's most valuable technology companies. But the dot-com bubble was about to collapse. In 2017, Yahoo's core internet business was sold to Verizon for only $4.8 billion. By reducing his Yahoo exposure and buying the Mavericks, Cuban moved part of his wealth from a volatile public stock into a scarce, privately held sport asset. Joseph Tsai also reduced his dependence on Alibaba. His ownership declined from 9.26% in 2016 to roughly 1.5% by 2025. During that period, Alibaba's stock experienced major volatility, especially after Chinese regulators suspended Ant Group's planned IPO in 2020. Meanwhile, Tsai expanded into sports, entertainment, and real estate-related assets through the Nets, Barclays Center, and the New York Liberty. This may also help explain Bin Lin's investments in Miami Dolphins. He has been selling his Xiaomi holdings in recent years, possibly preparing cash for the new investments. The strategy is straightforward. Reduce exposure to one concentrated technology position and reinvest the part of the money into assets with totally different risks and revenue sources. Technology stocks can fluctuate because of inflation, regulation, and the investors' sentiment. Sports teams also carry risks, but they benefit from limited supply, loyal fans, broadcasting rights, sponsorships, ticket sales, and long-term cultural value. Markets may rise or fall, but games are still played, stadiums still open, and the broadcasters still pay for content. The lesson is not that everyone should buy a sports team. The lesson is that strategic asset allocation is not only about earning the highest possible return. It's about making sure that one company, one industry, or one market event cannot destroy everything you have already built.